Hi there, my name is Shauna B, and I would like to provide an example of a gross to net paycheck. And this is just a general overview of what you might see in reviewing your own paycheck. And let's go ahead and get started. So a gross wage is the amount of earnings that you make before any taxes or deductions are withheld. And generally this is going to be something like, your wages, your overtime, any bonuses that you make. In this example, we're just going to use a regular wage rate of $15 an hour and say that person worked 40 hours in a work week. So the amount of their regular wage is going to be $600. Say they also got a bonus of $200 that same week. So in this example, the total gross wage is going to be $800. So again, your total gross wage is going to be $800. Let's go on to taxes. So both the employee and the employer have a responsibility for paying taxes. However, in this example, we're just going to use the calculation of what you would pay if you were having taxes deducted from your paycheck. And Social Security is a mandatory tax, as is Medicare. And then your federal tax will vary based on the amount of money that you're making each payday and based on your tax filing status. So the Social Security rate is 6.2%. The Medicare rate is 1.45%. And this amount can actually vary and increase if you make more than $200,000 in a calendar year. Federal taxes, again, they do vary for each person based on the amount that you're making each payday. And in this example, we're just going to use a flat rate of 10%. So your total tax rate for this check is going to be 17.65%. 17.65%. Let's move on to deductions. So in this example, what you pay as an employee is going to be a after-tax medical deduction, an after-tax dental deduction, and the dental deduction will be $7, your medical deduction will be $22. So the total deductions that you'll be responsible for in this example would be $29. Let's move on to a sample calculation. So using the information that we provided in the prior slides, so in this sample calculation, again using the prior slides, your gross pay was $800. And your Social Security in this example would be $49.60. This is the amount that you would be responsible for paying based on 6.2% of your $800 gross wage. For the Medicare tax, that's going to be $11.60. And that is the rate we saw earlier of 1.45% times $800. And again, your Medicare rate would be, or the Medicare tax would be $11.60. Using the example of 10% for your federal tax, if you take $800 times 10%, that's going to be $80. So your federal income tax for this paycheck will be $80. The deductions that we listed prior for your medical and dental were $29. And this would actually give you your net amount, or the net pay that you would actually receive, of $629.80. Okay, so here is the breakdown. So $800 is your gross pay. Here is your Social Security tax that's going to be withheld, your Medicare tax that's withheld, your federal income tax, and then your after-tax deductions. So again, this is a basic gross to net calculation. The amount that you'll expect to receive as a check or by direct deposit should be $629.80. Sample calculation again. Here's the information that you can actually go back on if you'd like to review it again. You can look at the prior slides and see if you understand this basic calculation. You might want to compare it with your actual pay stub to see what you're seeing on your pay stub. This is not going to include what the employer pays, but just what you would be responsible for as an employee on your check. Just a few notes. So there are also state and local taxes that could apply This does depend on your state legislation and where you work and or live. The following states do not have a standard withholding tax, and they are Alaska, Florida, Nevada, South Dakota, Texas, Washington, which is where I live and work, and Wyoming, and also New Hampshire and Tennessee. These two states do have additional requirements that may be required. However, generally, an employer is not going to withhold taxes for New Hampshire and Tennessee. So your federal W-4 form, this is actually a form that helps determine your federal taxes that we talked about earlier. And you can just Google it, look on the internet, download the form. There is a worksheet that can help you figure out what your exemptions might be. Your employer might also have an electronic version of this, and I would suggest using the worksheet first to see what your tax exemption should be. That would be very helpful, especially if you're not sure what to claim when you're filing your taxes. As I mentioned earlier, if you do not provide a W-4, the employer should default your tax to single zero, which is the highest tax rate. If you're not sure what to claim on your taxes, I would suggest consider talking to a friend, a parent, a family member, or actually hiring a personal accountant if you're in a position to do that for additional help. If you actually have more than one employer throughout the year, your pay fluctuates. You might have two employers. This could determine what you have to pay at the end of the year or get back. So you may have to pay again, or you might get a refund when you file your taxes, but this is something that employers traditionally do not go over, as it is a personal responsibility for the employee to determine what they're liable to have withheld. I'd like to talk about other taxes and other deductions in other sessions in the future, and include more information about employee versus employer taxes and deductions, liabilities, and accruals. Examples of employer taxes are going to be the employer's portion of Social Security and Medicare. It might be an unemployment tax. It might be a workers' comp tax that has to be paid, or a state disability. Those are examples of additional taxes that could apply. The other deductions could be something like a 401k or life insurance that you're contributing to. And again, we'll just cover those in future sessions. FICA may be a term that you hear as it relates to taxes, and it's basically just Social Security and Medicare combined. So it's just those two rates of the 6.2% plus the 1.45 combined. And that actually is paid by your employer to the Federal Department of Treasury. And again, it's a one-for-one match. A little bit about me. I've been working in payroll for 20 years. I actually was in the Army for 10 years, so I'm a veteran, and started working with people's pay when I was in the service. And luckily, this is something that carried over for me in the civilian world. I have worked for large and small employers. I've processed pay for all 50 states, Puerto Rico, and Canada. I've been responsible for daily pay, weekly pay, bi-weekly, and monthly payroll cycles. And I wanted to share these basic calculations for people entering the workforce, as it's something that I have seen over the years that people are not necessarily familiar with at first. It is the employee's responsibility to make sure that their paycheck looks right, to make sure that you're reviewing it, make sure that you're withholding at the right rate. Your employer is basically the one that issues your check, but you still have to have some responsibility in making sure that your pay is right. So I hope you enjoyed this video. If you did, please subscribe. Again, my name is Shauna B. Here is my LinkedIn information. If you'd like to look at my profile, feel free to send me some messages. Put messages down, at the beginning, or excuse me, at the end of this video. And I'll just go back up to the first slide so we can just kind of start from the beginning again. And feel free to, fast forward. You can review, go backwards on the video if you're not sure about something. If you'd like to see me talk about a specific topic, please put that down in the comments as well. Have a great day. Thanks.